I thought I'd struck gold. And then all of a sudden I just got this overwhelming feeling of like the walls of my life closing in on me.
Sam Rosenberg, co-founder of Behavioural, a personal finance platform for long-term investments.
We are the first generation set to be less well off than our parents. Hundreds of years, generations have been getting wealthier, and we're the first generation set to get poorer.
Wow.
And what's even scarier is that we're not doing anything proactively today to fix it.
Why do we feel like this?
We are sitting on cash, we feel like we don't have the expertise, we conflate investing with stock picking, investing feels very risky. There is a fundamental flaw.
Oh my God, there's just so much risk. Am I able to educate myself or make some calculated decisions?
One way that we help customers manage risk is...
Welcome to the Immigrant Founders Pod, where we explore incredible stories of entrepreneurs who've crossed borders, faced adversity, and built thriving businesses against all odds. And today, I'm joined by Sam Rosenberg, who's the founder of Belong, a personal finance platform for people who are ready to invest in the long game. Welcome to the pod, Sam.
Thank you.
We have spoken a few days ago during the pre-pod call. You told me a few interesting things, especially how you got into this, into the whole fintech space.
Yeah.
So before we actually talk about Belong, which I think is a fantastic name.
Thank you.
Where did your journey start?
My journey started in South Africa. I'm originally from South Africa. I born and raised, grew up in Johannesburg. Absolutely loved growing up there.
You're Joburger.
I'm a Joburger, yeah.
You see, I know.
The city of gold is what they call it. And then when I got to university, I moved to Cape Town. So I spent a good few years in Cape Town and then moved back to Johannesburg once I finished my master's. So I studied economics and law, did my master's in economics, specialized in behavioral economics. As I was coming out of my master's, just by luck, really, I was introduced to someone who was starting the first team of behavioral specialists in Africa. So when I was doing my master's, and I had specialized in behavioral economics because it was just really interesting. And my research was looking at gambling addiction amongst the poorest households in South Africa. It was so fascinating. It was this intersection of economics and psychology, helping people, understanding the way people behave, just really this mergence of so many things that interested me. And I remember having the conscious thought of, wow, it would be so cool to turn this into a career, understanding how people behave and then building interventions to better understand that and then fix it in some way or another. Anyway, that was a fleeting thought. And I thought I'd go into consulting. And then, as I said, I was introduced to the guy who was building the first team of applied behavioral specialists. And this opportunity presented itself to do that as a full-time job. So I joined his team. And given this interest that I had in not just the way people were behaving, but specifically how they were behaving with money, I worked on the financial services portfolio for the team. So that meant working with all the big banks, the investment companies, insurance companies on how to embed this understanding of human behavior into their products. And yeah, so I did that for 5 years, absolutely loved it. Was living back in Johannesburg in my hometown with my parents, which was great. I saved a lot of money.
Days.
Yeah. And I commuted to Cape Town quite a lot. I traveled around Africa. I traveled around Europe, as one does as a consultant. And I was pretty happy to do that for the rest of my life. I thought I'd struck gold. And then all of a sudden, I just got this overwhelming feeling of like the walls of my life closing in on me. It was, I guess, some element of it was, surely I haven't figured this out. so early. Like no 25-year-old has like figured out their whole life, and it's just like plug and play from there on. And that's when I started looking at throwing myself, I always say, back into the randomizer, where, at certain points in your life, I speak about this a lot. Any of my friends who are listening to this will roll their eyes, but I've always found it crazy that you get to 18, at least in South Africa, and it's what do I want to study? But you don't realize that what you choose to study dictates quite a big part of your life. For example, if you decide to study medicine, you're then a doctor. You're a doctor. You decide to study law, you're a lawyer. And I had decided to study economics, and I was now an economist. And there had to be another way to throw myself back into the randomizer and see what I come out as. And doing an MBA seemed like a really good way to do that. So I applied to London Business School. My older brother was actually at London Business School at the time. So I kind of had a bit of a insight into how much fun he was having. And of course, all the personal and professional growth he was experiencing. And I applied, I got in, and that's how I found myself in London, back in the randomizer.
I love how you call it the randomizer.
Yeah.
I don't think I've ever heard that before.
I think I made it up.
That's pretty cool, actually. So when did you move to the UK?
In 2019.
Okay, so pre-COVID then.
Just.
Okay, just, yeah. I mean, I moved to London, I think 2 or 3 days before lockdown. So I think we moved around about almost the same time.
Yeah.
It's pretty interesting. Interesting times. And then lockdown for supposedly a couple of days, but then turned out to a couple of years.
Yeah.
But so again, just your backstory a little bit more. So South Africa, between Cape Town, Joburg, London Business School happened only because your brother was here, or was there an aspiration to come out of South Africa?
I want to try to answer this in a way that doesn't rewrite history.
Or are you trying to be politically correct?
No, not at all. In all honesty, if we were to read my admissions essay for London Business School, my plan was to come to the UK, do my MBA, maybe get a couple of years of work experience, and then go back to South Africa and join the family business. That was what I had envisaged. Growing up, joining the family business was almost an inevitability. And whatever I was doing as an economist, as whatever I came out of business school, it was all going to end up in me joining the family business when the time was right. And I really felt very strongly about earning my way into the family business and doing it in a way that felt right for me and in a position that I wanted to do, a role that I wanted to play in the business. So a lot of it was kind of figuring out, but the end goal was to go back to South Africa.
Wow. Okay. But you're here now.
I'm here.
And I think you've perhaps put yourself in a position where that end goal has now, there's a huge deviation to that end goal. Because you're not just working for a company, you've started your own.
Yes, you.
And hopefully then that can be the family business that the next generation aspires to come into.
Yeah.
So
as additional context, it was a similar story for my older brother.
Oh, really?
And he also found himself coming out of the MBA into entrepreneurship. And my dad has since sold the family business.
Oh, no way.
Yeah.
Oh, wow.
He sold it. And now it's kind of like whatever we build, that's what will be the family business.
Oh, that's amazing.
Yeah.
Talk about changing the trajectory of the family.
Yeah. Of a generation.
It's the entire generation.
Yeah.
That's so interesting. Again, just one more time, going back South Africa and coming here.
Keep just taking us forward.
Yeah. Let's just go back in time.
Let's go back.
I think it's also important, right? So important to remind ourselves where we've come, how far we've come. I think it just, at least for me, like it helps me stay grounded.
Yeah.
You're just more appreciative and more grateful to what you have today.
Of course.
So challenges, or was it smooth sailing because your brother was here moving to the UK?
It was pretty easy. in terms of the things that I would find challenging, being away from family. That's a huge one. I moved into the apartment downstairs from my brother. I was essentially following in his footsteps. He had just finished his MBA at the same school. I mean, all the lecturers knew him. I knew what to expect. He could really help me. So there was very limited uncertainty for me on the things that would usually worry me. Being away from family, not knowing what to expect. Will I be able to do it? What's the workload going to be like? Will I make friends? He'd almost de-risked all of that for me already. So I mean, I have to say, I landed with my bum in the butter, thanks to his being here. Of course, there are challenges. There's always challenges, but I think personally, the things that I would usually find challenging, I was lucky enough not to.
And that's huge, by the way, because I mean, I've had my own fair share of moving from a different country to the UK. Extremely challenging. Didn't know anyone. The entire system, navigating, like simple things like opening a bank account and, all that. Like, I mean, everything just changes, You would think, oh, you're coming to a country, everyone speaks English and, happy days. Yeah. That's, the, expectation versus reality. Yeah. I think London is also very interesting where, it's such a multicultural, I mean, it's a huge melting pot. Like everyone from everywhere is here, which is amazing in my opinion. And that's why I think that is also one of the catalysts why the country and the city has grown so much exponentially over the years. So yeah, there were challenges, but I must say, even for me, not knowing anyone has not been as challenging as I thought it would have been before I actually moved here. The city is so welcoming. Londoners are so welcoming. Yeah. I think the system is also, perhaps, at least in my opinion and my experience, system is also made to nurture people coming from abroad. I mean, even the startup ecosystem. I mean, that's one of the reasons I moved here as well. Yeah. Did you feel the same way?
Yeah, absolutely. And I think just as you were speaking through this melting pot, that's definitely something I experienced and noticed. And in some ways, even found that a bit of a challenge in its own way. So if we look at London Business School, which is, so it's 500 students in a class, between 70 and 80 countries represented. So that's like,
wow.
That's our metaphor for this melting pot, this melting pot of London. What I found to be challenging in that context was you're in a room, 500 people from 70 different countries. You can't assimilate because there's nothing to assimilate to. And I very quickly had to figure out who I was in that room, because I think I realized that growing up, I was very good at assimilating. I could pick up on the tone of the room or the I don't know, whatever was going on around me and assimilate. And I became very good at, making friends with people. And I've always considered myself a people's person. And I think a lot of that is because of this ability to assimilate and to pick up on cues and kind of like slot in. And then all of a sudden I'm in a room where there's nothing to slot into. And you have to dig deep to think about what do I stand for? What do I believe in? Who am I in this room? So I think on the challenges part, it was less around the moving to the UK and moving my life and all of that, and more the personal challenges that came with being in that room of 500 people where I'm trying to figure out who I am, what I want to do. I'm now no longer this person that's come to the UK to get an MBA to eventually go back to the family business. I'm very attached to my family. I'm now away from my parents. I'm in this foreign country. It was more of this personal journey that I had to go on of independence, I guess.
Yeah. It's also interesting when you speak to 5 different people who have immigrated. You have 5 different experiences. Yeah. So like for me, so I was raised in Dubai, and Dubai is also a melting pot. So for me, actually, that was so much. I mean, one of the reasons I'm also here is because, it was so relatable. Yeah. Dubai is a melting pot. London is a melting pot. Happy days.
I can do that.
Yeah, I can do that. It was just so much easier from that context. But again, you had just different challenges. So I didn't have the experience you had. And that's why it's also interesting to exchange these kind of experiences, because yes, there are different challenges. It's just the nature of challenges that change, or it varies depending on your life experiences.
Yeah.
So London Business School, and you were trying to navigate, your space, where you belong, don't belong. But then somehow you found someone, and then off the back of it, you felt like you belonged, and then Belong was born. I'm trying to add a thread to it. But yeah, I mean, if we can just...
There's a lot of kind of subliminal marketing going here. Belong.
Yeah, so if you can just tell me how the whole, or maybe taking a step back first, what is Belong?
Belong is a wealth building platform. So it came out of this problem that my co-founder and I identified, and actually both experienced personally in our own ways, through our life experiences. And really it's around young people not doing enough to build sustainable long-term wealth. We are the first generation said to be less well off than our parents. For hundreds of years, generations have been getting wealthier, and we're the first generation set to get poorer.
Wow.
Which is really scary when you think about it. It's in the headlines. I think we've all become quite desensitized to it, but when you break down what it actually means, it's pretty scary. And what's even scarier is that we're not doing anything proactively today to fix it. And there's a lot of reasons for this. There's behavioral reasons, there's psychological reasons, there's practical reasons. But we really felt like there needed to be something, a business, a brand owning the space of building long-term sustainable wealth for your future self. So we came together, we built Belong. It's an app on your phone. Minimum investment is £1,000. We started by doing a lot, and we'll get into the journey, but a lot of speaking to our target customer. Each of us, my co-founder and I, we very much identify as the target customer, and our community is our target customer. So we had access to our customer from jump, and we spoke to people. I'm unpacking this problem. So we very much started with the problem, and the customers gave us a solution. So the problems, as we peel back the layers on the problem, we're not building wealth. Why not? We are sitting on cash. We feel like we don't have the expertise. We conflate investing with stock picking. Investing feels very risky. I like the feeling of cash, holding on to it. It's very difficult for me to make decisions for my future self. I want to satisfy or gratify current Sam. Future Sam is a stranger. And yeah, out of that, we came up with this investment platform that makes it very clear you don't have to pick stocks. It's kind of I always say we're productizing Warren Buffett's advice.
Oh, I love that.
Is just buy the market, buy and hold. And when we get onto the name, it's Belong. It's belong, but also belong. Buy and hold. The stock market goes up and down every day. If you look at it every day, it does look pretty risky. But over the long term, we've seen this upward trend. And yeah, historical performance is not a guarantee of future performance, but it's a good indicator. And so we've reduced choice overload, coming to the platform, start with £1,000, get invested, and then it's around how we help you to build that wealth over time. And we've got this very interesting feature, which is really our USP, the boost loan. And that's what our customers are getting really excited about.
I've seen that. You start with £1,000 and then you get a boost loan for another 1,000.
Yeah.
That's super interesting. And like I said initially as well, I love the name. And now the meaning behind as well, and also the belong.
Yeah.
So in it for the long, I love it. So about your co-founder.
Yes.
London Business School. And you met her there? Or?
Kind of.
Okay.
So while I was doing my MBA, I was fortunate. I always say when I came out of my master's in South Africa, I by chance met this this man who was starting this team, and I always used to say I can split my life into two parts, before and after I met him. There's now a third part to my life, and that's before and after I met Nick Hungerford, who I met during my MBA. He's the founder of Nutmeg, and he was one of my guest lecturers. And for some reason, I don't know where it came from, I decided to reach out to him after one of the lectures and ask him if I could have some career advice, which is very unlike me. I don't. The spirit moved me to send him a message on LinkedIn, and he replied. He's a very busy guy. He was living in Singapore at the time, and I never thought he'd reply, but he did. Just kind of my own version of a celebrity. And he started mentoring me. At the time, I was just looking for an internship in fintech for a company that was interested in behavioral science and embedding behavioral science into their products. I was really interested in fintech. And we chatted for a few weeks, moved into months. And at the end of it, he said to me one day, he said, Sam, I don't think you should join a fintech. And I was like, what? No, but I should. That's, of course. I mean, we've been speaking about this for ages. And he was like, no, I think you should start one.
Wow.
And I've got someone to introduce you to, because I think you two can come up with something really amazing. And so he introduced me to my co-founder. So I always say that my co-founder and I, her name's Avion, that we met through business school, but not really.
Well, the real story is much cooler. And you see, it's so amazing. I truly believe, Sam, if you do something with the right intent, you do attract the right circumstances and the right people. So, I mean, that is also a testament to that,
Yeah, it's my own personal example of the law of attraction.
Absolutely. Absolutely. Oh, that's amazing. That's amazing. So tell me a little bit more about Belong. I've understood the reason behind the starting and obviously the name, and I love the name and I love the branding. You guys are doing a fantastic job. So kudos to you guys on that. You are, it's a fintech space. You come from a different background though. So who's the money or the finance person in the business? Is your co-founder the finance?
Yes. So her background is in, or maybe a bit more context on why Nick always said that he introduced us. He said, you two are speaking to me about the same problem, but you're using different language. And so I was ripping his ear off about all the behavioral elements of why people aren't saving and investing. I've always barking on about present bias, the future self. If you can have £100 today or £1,000 a year from now, you choose £100 today, and the further that £1,000 gets away, the more likely you are to take the £100 today. And we've got the smartest minds in the world running businesses that are aimed at getting you to spend take that £100 today and spend it. It's no wonder that we're finding it, as a generation, we're finding it so difficult to make these decisions that are going to benefit us 10 years from now. So I was speaking to him about all these behavioral problems that I had identified. And Avion, my co-founder, she grew up in Trinidad, studied finance in the US, worked in investment banking, did her MBA at Stanford, went back into investment banking, so a really hardcore finance background, and then had spent many years working in fintech, in a product role in fintech. She scaled a startup across the US and had recently moved to the UK to lead the European launch. And she was speaking to him about this problem from a mathematical perspective. As an investment banker, she was saying, we should be getting in earlier with more compounding. This generation, she speaks a lot about the paradox of wealth, that to build wealth, you need two things. You need time and money, because you need your money to compound over time. The challenge is that we rarely have those two things at the same time. When you're young, you have all this time ahead of you, but we feel like we don't have the capital to invest it in a meaningful way. And when you get older, you've amassed the capital and you're like, okay, I'm ready to invest, but you don't have no time. And how do we correct that paradox? How do we get people invested earlier when they have the time for it to compound? And one way that that's done really well is with a mortgage. You can give people the capital to invest in an appreciating asset before when they don't actually have the capital to hand. In some ways, you borrow against your future self. But we're facing a housing crisis, and we can't get mortgages like our parents and our parents' parents could. And the property market's different. So that was where Avion was coming at it from. So he put us together, and this duality of the behavioral and the rational, or the emotional and the mathematical, is weaved into the fabric of how we've built this business, from how we speak to our customers, how we understand the customer. The customer suffers a duality of these two problems. They have the behavioral challenge, but then they also have this very real rational challenge of, I don't have enough money to invest. But then it's also, what is enough? It kind of oscillates between rational and emotional.
Perfect match. But yeah, because I mean, it's interesting. I remember speaking to you in the pre-pod conversation as well, where you were trying to apply. You were obviously speaking to me from a behavioral angle, which I thought was fantastic, and your history as well, or your background. Gambling, addiction, and why. Obviously, we're not talking about gambling now, but I think there is maybe a slight correlation where you want more, but you don't have more, and you just don't know how. So, from that premise, Belong then comes in and tries to solve that problem.
Yeah.
If you can talk to me a little bit more about the problem. You said you spoke to the customers. Obviously, you're the ideal customer, but then you spoke to many other customers. What were how can I say, like the top 3 issues people have today? And I completely agree with you, because every other person I speak to, I mean, people are also not, in my opinion, people are also not seeing this as a problem in a way that, I don't need to buy a house because I don't want to be stuck to one place. I want the freedom. And I think maybe all these conversations you start telling yourself, and you normalize the situation, and it's okay.
Yeah.
My parents did whatever, but I'm not that generation.
Yeah.
I'm forward thinking, and I want to travel the world, and I'm a solopreneur, or I can freelance for the rest of my life, and so on. So I think
YOLO.
YOLO, exactly. So I think we're also, I wouldn't say, and again, everyone is different, but sometimes maybe you kind of tell these stories to yourself just so that you normalize the situation.
Yeah.
But what are the top 3 things in your opinion that really struck out, that, oh my God, like these are the real pain points, or these are the problems that we want to solve? It could be more, could be less, but yeah.
I'm going to go with more. So I speak about this rational and this emotional, behavioral, psychological, whatever you want to call it. That comes through in the way people articulate the problem. So we sit down with the customer and we say, do you currently invest? Sometimes it takes a bit of back and forth. Yeah, I invest. Okay, when was the last time you invested? Okay, you currently aren't investing.
Yeah.
Most people. We ask 100 people, do you believe that it's important to save and invest for the future? And 100% of people say, no one's ever said no.
Yeah.
To that. Everyone says yes, which is the right answer. And then the second question is, do you feel like you're doing enough today to do that? And 30 out of 100 people say yes. That's 70% of people who agree wholeheartedly that they should be saving and investing for the future, but they know that they're not doing enough. And then the question is why? And the first responses we get are, I'm not an investor. I don't know how to pick stocks, and I don't have the time to figure it out. I don't have the expertise, which is a very rational thing to say. I work in, I don't know, I'm a doctor. No one ever taught me how to invest in stocks. So there's a whole lot there around, as I mentioned earlier, conflating stock picking and buying the market. People don't fully appreciate that you can invest in index tracking funds. The second one is, I feel like I don't have enough. I don't have enough to invest. And people don't really know what enough is, but the FT recently came out with an article which quoted the FCA saying that in the UK it's estimated that 8.6 million people have more than £10,000 sitting in cash. And I think more than 3 million people have over 20K sitting in cash. It's a lot of money.
Wow.
I'm not saying we shouldn't sit on cash. You need cash.
Sure.
You need cash to live. You should have your emergency savings fully liquid. But beyond that, anything in excess of that can be put to work. And the customers, they think that they have to have this big investment to start. And whether that's £1,000 for someone or £100,000 for someone else, it's this rational story we tell ourselves. I'm not an investor and I don't have £100,000, so I'm not investing. And then we get to the more psychological or subconscious, let's call them, problems that start to come out. So we say, well, when it comes to the amount of cash that you have, as I just said, you need money to live, you need your emergency savings, but anything above that can be put to work. And then it's, yeah, you're right. I know that. I just like the liquidity. It feels really comfortable seeing my money in my bank account, knowing that I can access it any time. Investing, it feels like giving it up. People say, I know that in order to invest in a meaningful way, I need to do it regularly. I need to make my first investment and then I need to commit to it. And I know myself and I know I just don't have that discipline. So there's no point in even starting. And so, yeah, there's quite a lot happening in the rational mind, but also in the irrational or predictably irrational mind.
Wow. Sam, it's interesting, and I'm also not surprised that the first one on your list was, yeah, but I'm not an investor. I don't know how to navigate the space. I'm a doctor, engineer, whatever. And yeah, it's just not for me. Do you think there's a fundamental flaw in our education system? I mean, I'm just thinking, why do we feel like this? We shouldn't be feeling like this from the first place. And you're absolutely right. We should be investing because nobody's ever got rich by saving money.
Yeah.
Right. You have to invest.
Yeah.
And everyone wants more from that perspective. So yeah, do you think there's a fundamental flaw somewhere?
Yeah, and that comes out in our research. People saying, I just never learned this. I didn't learn this through school, through university. No one ever told me about investing. Just the concept of what an investor is. You ask a group of people if they're investors, very few of them will put up their hand, even though most of them probably have a pension. We don't realize, or they have a mortgage, or anything that involves an investment in an asset makes you an investor. And yeah, I think there is a fundamental flaw. I mean, that's just a basic example, but there's so much that we miss out on in our fundamental years. Understanding these things, there's all these, you've seen the memes on Instagram where it's like, I haven't had to use Pythagoras' theorem, or but never learned how to do my taxes, things like that. But that humor is based on truth.
Yeah, absolutely.
That said, we do learn things like compound interest, which is at the core of investing.
Correct.
But there's something missing in the tie to what that means in terms of building your wealth, practically how this applies in your life. I was obsessed with maths. My whole school career, I loved maths. I could do compounding equations in my sleep, but it only occurred to me very later on in life that that's how investing works. It uses compounding. And we all understand compounding, and when we say the word compounding, almost desensitized to it because we don't fully appreciate the power of it when it comes to our finances.
Also, I think maybe the importance of it, what I'm trying to come to is, the importance of financial well-being, how that affects you as an individual, your mental health, the way you show up in the world. There's a big aspect to it. Mm-hmm. It's not just the numbers that you see reflected on your bank statement.
Yeah.
Well,
it kind of is, and how that makes us feel about ourselves, and it impacts our relationships. I said earlier that I was always very interested in the way people behave with their money specifically. That came out of my research with gambling addiction, is how people behave with money. And it was because I appreciated quite early on the role that plays throughout our society at an individual level, our mental health, our relationships, our family relationships, our partner relationships, how we raise our children, and then the microeconomy, the macroeconomy. It all boils down to decisions we make about money often. And it's such an important thing. And we have proven that there's a lot of irrationality involved, contrary to traditional economics. What traditional economics says, that we're perfectly rational, perfectly self-interested. We're not. We're perfectly irrational. We're irrational in these predictable ways. And yeah, it impacts us at almost every level. And one of our passions with Belong, and part of our vision, is to intercept that, and to, we say the Belong customer just has that swagger about them, because they know that they've got this lightsaber in their pocket where they're building wealth, and they just have this like additional bit of confidence and
it's power. Yeah.
Because they know that they've done this thing for their future self.
Yeah, no, I love that. It's lack of education, really. It's lack of education, and I think more should be done around it from our childhood, from our upbringing. You spoke about okay, teach me how to do taxes, for instance. If you teach me how to do taxes, I'll know the importance of having and managing wealth accordingly. And how that impacts my mental health, my well-being, my relationships, and how that then is correlated to my physical health, because your mental health is then, everything is translated into your physical body. So, I mean, there's such a deeper reason also to it.
Yeah.
Yes, quote unquote, yeah, you're building wealth, you're financially more stable, you're perhaps getting richer, but I mean, it comes down to your health as well from at least in my head.
Yeah. And I think there's also a taboo around it, and that's definitely
because money is the root of all evil. You see, but again, but it's not, because money is not good or bad.
Yeah,
it's people. What you do with money is good or bad. Like, I mean, today even AI gets a lot of backlash.
Yeah,
but really, AI is only as good or bad as the human being behind AI.
Yeah.
So
it's a tool.
It's a tool. So I completely agree with the taboo behind the entire subject as well.
It's shifting though, which is great. When we started Belong, we recognized that there'd been a whole host of taboo subjects that were now being spoken about. Mental health was a big one. She's like cracking open that conversation. Femtech, there was a lot going on in the femtech space, with apps like Flow, we're now like talking about the stuff. And money was kind of getting there, like wealth, talking about wealth. And what we've seen over the last 2 years of building this 2.5 years is that conversation's cracking open. And we're seeing it on social media with finfluencers, other brands in the space, in the broader fintech space, really leading with transparency and talking about how you build wealth, and starting to, I guess, de-bias in a way, or just get through some of the smoke and mirrors of money.
Talking about bias and money, you guys have raised recently, not recently. How long has it been?
So we raised our pre-seed in 2022.
Okay. Well, I mean, not too far along on.
Yeah.
Talking about bias within the space as well. Women-led companies, women entrepreneurs, so both you and your co-founder are women. Do you feel the landscape has changed or is changing when it comes to investments? Because you see a lot of stats out there where how much money goes towards companies that are founded by women versus men and so on. Did you see anything like that in your investment journey?
Yeah, I think that it ebbs and flows. If I just take this down to a behavioral answer, or an answer based on behavioral theory, when we make decisions, we look for patterns. That helps us make more efficient decisions. Investors are making thousands of decisions a day. They're making thousands of decisions per 30-minute pitch that they listen to, micro decisions. They listen to however many pitches a day, a week. Of course, they're going to rely on pattern recognition. So there's some element of, do you fit the pattern or not, whatever that pattern may be. And then I think another aspect of it is also from a behavioral perspective. We know that we've got system 1 and system 2. System 1 is our system 2 is our perfectly rational system. That's where we make big life decisions, like, should I immigrate to Australia? That's not a decision you're just going to make. You'll go through the thought process, pros and cons. You'll put a lot of thought into that. That's a slow decision. And then we have system 1 decisions, which is, am I hungry? Should I put my seatbelt on? These knee-jerk reactions. Do I like this person? We call them, it's a fast decision-making process. And most of our decisions happen in system 1, of course, because that's how we operate. It's how we operate as an efficient, humanity. And so a lot of investment decisions also happen. The final investment decision, I'm sure, often happens in system 2, but the micro decisions happen in system 1. And we know that in times of scarcity, we're more likely to lean on system 1. We're in survival mode. We have fewer resources. We're in system 1. So my research in gambling addiction, which was amongst the poorest households in South Africa, those were people who were making decisions about their money in extreme scarcity. They have very limited resources, money, food, everything. They're more likely to make system 1 decisions, which can often result in mistakes or bias. Don't always. System 1 exists for a reason, but it's more susceptible to bias. And what we've seen over the past 2 or 3 years is when there's a lot of money to be invested, it's easier to lean on system 2 or make fewer system 1 decisions or have less bias in our system 1 decisions. But as resources got more scarce, we revert to the mean. And I think when I say it ebbs and flows, that's a natural process of decision making that happens. And whatever that mean is, we did see this kind of reversion to second time founder. We start taking just things that more closely fit the pattern, or i.e. safer bets.
Yeah, I mean, what they're essentially trying to do also is de-risk the capital that they have, because they're also answerable to an LP or
of course
any other investor.
Yeah. So we're always just doing our best to de-risk based on the information that we have. And I think, it works both ways when we have this conversation around funding and where the money goes. And there's also, to some extent, and perhaps this is an unpopular opinion, but to some extent there's a responsibility on us as founders, whether in whatever way, I guess, understanding how you do and don't fit the pattern. And finding ways to fill those gaps and to fit a pattern of a successful entrepreneur while also stretching the pattern. So my co-founder and I, we didn't perfectly fit the pattern. We're both first-time founders. We're both women. We're both, neither of us had worked in wealth tech before. We're both not engineers. But we are both highly educated. We both had expertise in ways that were relevant to building the product. And we had, where we could fill gaps, we did. So for example, with advisors. So making sure that, neither of us were engineers, but we had a really strong engineering advisor who helped us build. So yeah, it's stretching fitting the pattern, stretching it. And it's kind of 2 steps forward each time.
I love that. And it's really important for people perhaps to be aspiring, entrepreneurs, founders who are trying to open companies, start companies, or maybe already founders who are trying to raise. And yes, definitely there's a lot of bias. But I think And when I was raising, so we've raised a couple of times, and I remember a couple of years ago, I think this was during COVID, when I was trying to raise, and I was speaking to some founders, and they're like, "Oh yeah, market is bad, but it's going to be worse for us." And the reason that person said us is because he's like, "Oh, because there's a bias between you're not a white male, so even now in men there's a
there's always
a racial bias."
Yeah.
So I'm like, okay, wait, hold on. Already raising money is hard. If you're a white male, or if you're a woman, or if you're a brown person like me, I chose to ignore that fact because raising money is hard anyway. The only thing I can control is this me. I can't control the dynamics around. So, and that's the only thing that I focused on. And goes into what you just said about stretching. So I just stretched whatever I could do, because any thought that I put in from that perspective, where I might not be able to raise because the stats are not in my favor, that would be a ripple effect, like a negative snowball effect in whatever I was trying to do.
Yeah.
So just focusing on what I'm supposed to do, and raising money is hard, period.
Yeah. Raising money is hard for anyone.
Yeah.
And my co-founder and I, we say that a lot, and I think it's, if we've got 100 success stories of underrepresented founders successfully raising, we've stretched the pattern.
Yeah,
so now you've got 100 more people that look like X.
Correct.
Rather than Y. And we're almost providing more, it's just about giving more data points of what the pattern is, what a successful founder can look like. And I think that's the real challenge, is how we just drive those data points.
Yeah, no, absolutely. You did speak about de-risking. So as an investor on Belong, I'm a potential investor, and I do not want to invest, or I've never invested before because I don't know the system. We spoke about it before. I'm not an investor. So, and the reason I don't want to invest is because there's just so much risk. Because I have this pot of money which I've worked so hard to save, and now I don't want to let go. So, how can Belong, or how does Belong, or does it, help me de-risk? And of course, with every investment, there is risk.
Yes.
Okay, capital is always at risk.
Yes.
But is there, am I able to educate myself or make some calculated decisions if I'm using Belong?
So one way that we help customers manage risk is we only offer 4 index tracking funds on the platform. We offer the S&P 500, MSCI World, FTSE, and an ESG option. There's also a bond fund if you'd like to go with that. But our primary funds are the 4 index tracking funds. And that's really managing risk, in that customers aren't having to pick stocks themselves, especially if they don't feel comfortable doing that. It comes down to the decision of, do you believe that the US economy is going to grow over the next 10 years by the S&P? Do you believe the world economy is going to grow over the next 10 years by the MSCI World, etc.? So it's really breaking it down for customers and helping them to understand that you don't have to pick stocks. Picking stocks can be a thrill, but that's not the only way to invest. You can buy these index tracking funds, which has inherent diversification built into it. As long as I say, you have your emergency savings and your money that you need to live. An index tracking fund it's how I invest. So that's one way that we do it. On the education piece, it's a lot of it in the UX. So we got feedback from customers saying they go onto platforms, investment platforms, and this is a direct quote. I feel like I'm on Wall Street. I feel like I'm gambling, and there's like green and red and things are going up and down, and you make a decision really quickly, and that's triggering your system 1, because you're like, oh my gosh, what is this green and red? And I need to make a decision, and I'm going to lose the money, so I better do it now. And that's your investment made, or you just close the app and you don't do anything. What we've really tried to do in our UX is we base it more on meditation apps, and the whole journey is how we put people in system 2, and it slows down the customer's decision making, but it ensures more system 2 or more rational decisions through the journey. So it's virtually impossible for customers to like breeze through, like go through really quickly. It's a short journey. You can get through in about 5 minutes, but that's because you make very few decisions in the 5 minutes, not because it's a very fast app in terms of the way you're interacting. The weight screens are like very slow moving clouds. And as I said, our designer took inspiration from meditation apps and how we get people into this very calm mindset or state of mind. So that's another way that through the UX we de-risk.
It's really interesting because when I first saw your branding, I wouldn't have correlated for it to be like an investing fintech app. Like it's so interesting from the name and the branding, and now you're speaking about the UX. I haven't seen it yet, but 100% I'm going to download the app after this pod. So what would you say is, the prime differentiators? You spoke about the UX, which is fantastic. So your USPs, I mean, why is Belong, in your eyes or in your opinion, winning today?
The Boost loan. Yeah, so we haven't really spent too much time on that. How it works is, you very perfectly summed it up. Customer brings their cash to the platform. So minimum £1,000, but it can be whatever the customer feels comfortable with. So say the customer brings £10,000. They can then apply for, so they invest that in one of the index tracking funds of their choice, and then they can apply for this Boost loan, which would be up to another £10,000 that they borrow. So that's £20,000 that gets invested in the fund of your choosing, in your name. It's in the market, it's compounding. And then you repay the £10,000 you've borrowed each month. So it's almost taking the structure of a mortgage, where you borrow money to invest in an appreciating asset. The asset appreciates, you repay the money you borrowed at a lower rate than the asset is appreciating. And it's applying it to the stock market, the structure. It's obviously not a mortgage, but it's the same concept of tapping into leveraged asset returns.
That's so interesting. Wow. So is that something proprietary from Belong? So this is money funded by Belong for them to use?
Yeah, so we have lenders, but it's
correct.
It's our proprietary product.
Oh, that's amazing. That's amazing. It's amazing because somehow there's a product within a product as well. Really smart.
Yeah.
Oh.
We actually started with the Boost loan. That's where, so with all this research that we did and talking to customers and the paradox of wealth, because that Boost loan really beautifully solves the paradox.
Correct.
In that it gives people
double the money.
I've got double the money. All of a sudden I do have enough money today when I'm younger to make a meaningful investment while I still have the time. And that's really where this Boost loan was born, was how do we give people the money to make a more meaningful investment while they're younger and can benefit from compounding. And then, it's a 5-year loan. So you bring 10, you get another 10, £20,000 goes into the market, you're repaying it each month. Currently it's at 6%, so between 5 and 6%. After 5 years it's paid off. It's an amortizing loan, so it's fully paid off after 5 years. And then you can take another one.
Interestingly, the way I look at it, obviously with the, double the money now to invest, now I've got more money. So now that first excuse that I was giving myself, I don't have enough, now I have enough. But interestingly, I think because I've got double the money, I've also somehow bought more time. So, shit, maybe it's too late, but now it's not, because now you've got double the money as well. That's so interesting.
Yeah. So that problem that I spoke about earlier, where people say, I've lost out on too much time, should have started 5-10 years ago. Those same customers are telling us that the Boost loan feels like catching up.
Yeah.
Catching me up on the time that I should have started 10 years ago. I didn't, but now I can catch up.
Yeah, no, absolutely. So who's Belong for? You spoke about your ideal customer, which is you, but is it then now limited to this age bracket? Who's it for, and what's the pattern you see today?
It's for me. And millions of other people like me. So our core target customer is 25 to 45 years old, but you can invest from 18. There's no age limit. You just have to be 18 years old to invest, but there's no kind of upper limit on the customer. We really set out to serve this white space that we identified, which is young professionals who are earning enough money to have this excess cash. They've built up excess cash. A lot of them are getting bonuses. So it's, lawyers, consultants, we've got accountants, doctors, people who are earning enough, have excess cash, don't feel like they necessarily they're not investors, whatever that means to them. They have that bias, and we really look to unblock them. That's our core customer. We also have a subset of those customers who are investing and have been doing so for a while, and they are diversifying across many asset classes, and they see this as an additional way of diversifying at scale because, they come onto our platform. They would typically do a 20K investment each year in, let's say, as an example, the S&P 500. They can now do a £10,000 investment in the S&P 500, get the £10,000 boost loan, and they've freed up £10,000 to do something else with it. So it stretches in terms of how exposed you are already in terms of investing.
Got it.
And the pattern we're seeing, so that's our customer. We're targeting millennials and Gen Zs, but it's certainly not limited to that. We have even older customers that are taking it out either for themselves. We've got this customer that's saying, I've done everything else. I've got my pension. I've paid off my mortgage. I'm used to making monthly payments towards my wealth. This is a great way for me to continue building wealth. And we have people who want to do it for their kids, which is another whole kind of customer class.
That's really interesting.
Yeah.
Wow.
And then on the patterns we're seeing, it's our early adopter is the second customer I spoke about, a customer that is already investing and wants to do it at scale. And what we're seeing is that customer bringing their friends along. We recognize quite early on that we all have that friend that we go to for advice, for financial advice, that friend that's just got their shit together. And we found that customer, that friend comes to us organically. They get it. A lot of them are saying, I tried to do this. I went to a bank, tried to get a loan to invest in the FTSE, but I just couldn't get a loan at an attractive enough interest rate. So people that have tried to hack it, they come very organically. And then they've got friends that are asking them for advice or for guidance. I shouldn't say advice. They've got friends asking them for guidance. And then they bring that friend along. And that's a really interesting pattern that we've seen.
So is your growth trajectory or your growth so far been, word of mouth, referrals?
Yeah.
How have you sold or attracted downloads so far?
So far it has been all word of mouth.
Wow.
A lot of PR.
You must be doing something right.
PR has been very powerful for us. Word of mouth, I guess that's a version of word of mouth. And, we were very fortunate that the media picked up on our mission and what we're building, and referrals. But that only gets you so far, and we need to keep building out the growth mechanisms. But it's been great validation as a starting point.
Yeah, referrals. I mean, there's no better way of marketing than, one individual referring to the other. Yes, again, scalability is, how do you scale that? And startups have big aspirations, but I think it was, again, one of your recent posts on your LinkedIn page, your company's LinkedIn page, do things that are not scalable. I think that's also important at least when you're starting the journey. Yeah. I think it's really important, like you, and it resonated with me, by the way, writing those handwritten cards. I think that was quite impressive. And I think it's also really important.
Yeah.
So doing those little things, which are not scalable, but that helps you understand the pain points, build relationship, not only with your customers, but also your internal stakeholders.
Yeah.
Could be your employees or your shareholders, investors, and so on.
Yeah. Our first 100 customers, I sat on a call with every single one of them as they onboarded.
That's pretty impressive.
But it's the only way I learned so much from sitting on those calls and just observing and, not saying much, just watching how they interact with the app. If they had a question, they could ask me. I was very fortunate to have customers that would be willing to let the founder listen in as they onboarded onto an investment app. But yeah, it's things like that we've always done, and I think a lot of startups do them. And yeah, maybe some don't, and it's taken for granted how important they are. But for us, it was just always a no-brainer that every single person, we're a small team, so like everyone is involved at that grassroots level. And we're still at a stage where every single customer that we onboard, we can give them a hands-on experience, and we make sure that if they get stuck somewhere, that there's someone helping them within 5 minutes.
And I think that's so powerful, especially in this day and age of, the advancements of technology, and everything is automated and everything is AI and everything is a chatbot. Nothing beats that human interaction.
Yeah.
That just changes everything. The user experience just immediately changes. The trust that you're able to build on that call, that's just immense value. You actually can't put a dollar value on the trust that you're able to build through that interaction.
Yeah, I think so too. I think it is always a balance. This doing things that don't scale, it's got a time limit on it. You do it for your first however many customers. And that was the original theory. You do it to establish your early customer base, but at some point, you need things that scale. So it's this balance of doing things that don't scale, but also making sure that we're testing and iterating on scalable growth mechanisms. Those are only important once we have a customer base. So, if we think about prioritization, it's trying to do both. But the latter is only relevant if you've got the former.
Oh no, absolutely. And you can't be writing 1 million cards. That is not good use of your time. So what is the grand vision for Belong?
World domination.
Ooh, I love that. And the second vision.
The way we see it is we want Belong to be the place that this generation and future generations go to build their long-term wealth. It's the tool that they use that will grow with them over their lifetime to serve their wealth building needs. And to start, it's starting with your ISA, doubling your investment, getting onto the wealth ladder. But there's so much that we can do as our customers' needs change, as their life evolves, doing it for their kids. Being able to, once they've established the wealth, how do they then use that wealth? Borrow against their own wealth. There's all these financial mechanisms that exist out there that have been used for decades to build wealth exponentially, that a lot of ultra wealthy people have access to. And it's how can we democratize that when the customer needs it at that point.
Yeah, I think that's super impressive. And that whole educational part that we spoke about as well, that just helps. If the delivery mechanism is this seamless, and you're using your the type 1
system 1,
the system 1 versus system 2, if you're able to tap into the system 2 whilst you're making decisions like this, I think fundamentally you're also helping change people's perspective on investing. I think for me, really, off the back of this entire conversation is that, because what you're trying to also do or helping do is change the behavior of that individual at their core.
Yeah,
I
the
think
mental
that is
models that we use
100%.
Such that making decisions about my money is no longer a fast decision, or it's slow when it needs to be, and teaching people how to slow down that decision making. Or I guess in some ways forcing them to with the UX.
No, I love it. I love it, Sam. Fantastic app. Like I said, I absolutely love your branding. This has been a great conversation. But before we go,
Yes.
I have a final question for you.
Oof.
So, Sam, sitting here on this pod, co-founder of Belong, what would she say to the Sam, the introverted Sam growing up in South Africa? The little Sam, mini Sam.
You're going to be just fine.
Oh, I love that. Don't overthink.
Don't overthink. Don't overthink.
That's amazing. That's amazing. Well, Sam, thank you so much for coming to the pod. I absolutely enjoyed this. Hopefully, other aspiring entrepreneurs who are wanting to navigate their lives in the fintech space would have found inspiration and would aspire to be, follow on your footsteps. Where can we find you?
You can find us at b-long.co or Belong Wealth in the App Store.
Amazing. Once again, Sam, thank you so much for coming to the pod. I absolutely enjoyed this conversation.
Thank you.